Hey, good morning, everybody. So today's going to be part two of the things that they don't tell you when it comes to getting a mortgage and buying a home. So yesterday I had mentioned that you utilize your credit score to get pre-approved. Now, when you're getting pre-approved, you're going to go to a lender or you're going to go to your bank. Now, once you get pre-approved or once you put in that application, you have a 30-day window to shop around and go to other lenders or banks to have them also try to pre-approve you. And that involves them running your credit report. And as we all know, anytime somebody does a hard inquiry on your credit report, your credit score typically decreases. But you get a 30-day window when you're looking for a mortgage to have someone else run your credit report and you will not take a hit. So my suggestion to you would be to have a couple of lenders that you're interested in that you research. Definitely research what their fees are. Definitely research what interest rate they can offer you. And we're going to touch on interest rates. And also just research if they're, what their reviews are. Like, how did people like dealing with them? Did they get back to them timely? Did they have some unforeseen fees at the end of the whole process? But have a list of at least 3 places or 3 companies that you would like to go with, so that once you put in your application with the first one and they run your credit, within that 30-day window, you want to reach out to other companies and see what they can give you or offer you as well, so that you don't take a hit later or you wait a month and decide that company's not good for you. Then you have to go through this process all over again and your credit score is taking another hit. So the next thing that I'm going to talk to you all about in the city of Philadelphia, or one of the issues that I've noticed while in the city of Philadelphia and looking for a house, is zoning. So for those of you who don't know about zoning or what it is that I'm mentioning, is that with zoning here, your house has to be zoned a particular way in order for you to live there. So, you can't live in a place that's zoned as commercial. You can't go like buildings like Walmart and Target are zoned as commercial use. So you can't have someone living there. They would not allow someone to live there. So here, most places, your house is going to be zoned as a single family house if you're looking for a single family house. My house is zoned as a multi-use, multi-family property, so on and so forth. Now, when you're looking for a house, particularly when you're looking for a multifamily property, you want to make sure that house is zoned correctly. That means that when a person decided to either convert it over from a single family home, that's usually where the issue comes in, that they went down to L&I, license and inspection, and took the proper procedures to get that house remodeled or renovated to that standard. The reason I'm telling you this is because I had an issue like this with my first property that I was looking at. So, and I got all the way down to closing, and we realized that was an issue. So unfortunately for me, I got down to a week or 2 before I was about to close on a property, was advised by underwriting that the zoning wasn't correct. The certificate of occupancy was not correct. And, we reached out to the seller. The seller was stating that they knew somebody who can get this taken care of. I was believing them at the time because I wanted this property. This was my first process going through this for the first time. And it is not a quick process. To get zoning taken care of or to get the certificate of occupancy changed over, especially in the city of Philadelphia, it's nowhere near a quick process. And when I say it's not a quick process, you're looking at 9 months to a year, maybe even longer, to get that taken care of, because it is a long process to go through them. So to save yourself time and also to save yourself money, when you're looking at properties and you're interested in a property, especially if it's multifamily, ask your agent, is this zoned correctly? So your agent can reach out to their agent. And they also have to put that in the disclosure. But, in my situation, they falsely advertised that the property. Now, the property was kind of zoned correctly. It was commercial use / family use. And they were just using, I guess they were going off the family side of it. but the underwriting wanted everything to match up. They wanted the entire property to say multifamily use and also for it to be zoned as such, and it was not. So make sure you pay attention to that in this market here in Philadelphia, because there's a lot of people who have converted over a property or put a unit in their basement or put a unit in their attic, and the house is still zoned as single family use. And underwriting is going to catch that. And by the time they catch that, you might have already put a lot of money into trying to make this deal, meaning paying for your home inspection and paying for your appraisal. And as I stated yesterday, that is money you are not going to get back. It is going to be a loss. So to save yourself with that prior to, maybe putting in your offer, get as much information as you can. Ask those type of questions for your agent to ask their agent if you can, so that'll save you some time, money, and a major headache. Now, the third thing that I'm going to mention we're going to touch on is your interest rate. So as I stated, you want to shop around with different lenders and different banks within that 30-day period to see what you're pre-approved for, and then also see who is offering you the best interest rate. You want to get the lowest interest rate you can possibly get, because it will save you hundreds of thousands of dollars depending on how much your house is and how long you take out a mortgage for. Because essentially what most people don't think about is that when you do a 30-year mortgage, your payments are going to be low. They're going to be lower than, if you took out a 15-year mortgage. And they seem to be affordable. But you end up typically paying double what the value of the house is in interest. So what that means is that if you take out a $100,000 loan, you have a 30-year mortgage, meaning you have 30 years. They give you 30 years to pay this loan off. By the time you get to the 30-year mark to make your last payment, you more than likely would have paid $200,000 for that house. You would have paid double. So they would have gotten their money back, their $100,000 back, and then gotten another $100,000 back from you in interest alone. So when you're thinking of taking out a mortgage, also look at a 15-year loan. It cuts the time down in half. Your mortgage payments are going to be higher because you're paying the mortgage off a lot faster, but you also save a lot of money in interest. If you're anything like everybody else, we all want to save money in interest. You definitely want to save money in interest, because that's more money you get to keep to yourself rather than give to this bank. And depending on what your interest rate is, you can potentially pay more than the value of the house by the time that 30-year mark hits. Because interest rates now, I think, are like low threes. If you're doing a multifamily unit, your interest rate is going to be a little bit higher, or could be a lot higher than what the current low value is in the country, because of you have multiple units and they charge you for all of that stuff. When you're looking at a multifamily property over a single family property, your costs are going to be higher, and sometimes much higher than they would be with a single family property. Just definitely take that into consideration. Your home inspection is going to be higher. Your appraisal is going to be higher. Your interest rate more than likely is going to be higher. Your homeowner's insurance is definitely going to be higher. There's also fees when it comes to, in the city of Philadelphia, you get a multifamily property, you got to pay for them to pick up your trash. Unless you live there. If you're owner occupied, then they will cut you a deal, or they might not require you to make that payment. But they charge you for having a multifamily property. You also have to take into account, if you have a multifamily property here in Philadelphia, you have to get a renter's license. And that's a little process, but it's nothing tough. You can do it all online. But they charge you $50 for every unit that you have. So if you have multiple properties with multiple units in it, you have to get a renter's license for each one of those properties, and you're going to have to pay $50 for every unit that's in that property. And then also you're going to be paying up to $300 a year per property when it comes to them coming to collect your trash. So these are some things, as I stated, that you definitely want to pay attention to. The first thing that I had mentioned was shopping around with the lender or with different lenders, because you get a 30-day grace period, to whereas you won't take any hits to your credit score. So make sure you have a couple of places in mind when you are shopping around for a mortgage. The second thing that we discussed is the zoning issue here in Philadelphia. Make sure that when you're looking at a property, you get as much information to make sure that that zoning is correct, particularly with multifamily units, because you just don't want to end up in a situation where it's not correct and you're about to close, or you don't put money in for the inspection or the appraisal, because you're going to just lose that. You just lost that money. The third thing is interest rates. Make sure you shop around for interest rates. And last thing when it comes to interest rates is that you can negotiate your interest rate. You can negotiate your interest rate. If you have a good credit score and your bank is willing to work with you, or the lender is willing to work with you, you can negotiate down with that interest rate. Don't believe that just because they're telling you, oh, we approved you for a 3.2 interest rate, that you can't negotiate down to maybe a 3.1 or a flat 3% interest rate. Also, you can negotiate those fees that they try to charge you. In regards to, some places will try to charge you crazy fees just to run your credit report, just to do all of that stuff. And you can negotiate down, or you can say to them, listen, if I can go with this other company, they're offering me 3.1% and they're covering the cost of my credit report and these other fees. If y'all can match them, then I will go with you. So definitely negotiate as well when it comes to trying to get a lower interest rate with different lenders and different banks. But taking into consideration, they're more likely to negotiate with you if you have a good credit score, because they believe that you are at a lower risk than someone with a lower credit score who would be seen as a higher risk factor. So those are the three things that I'm going to touch on today. Tomorrow, I'm going to move into a couple of other things that you're going to run into when it comes to looking for properties. Everybody have a great morning. Have a great day.